Hi, and welcome again to another edition of Market Analysis for today, April 11th, 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. All right, so the response to Wednesday's hot March inflation data was swift and brutal. The odds of a Federal Reserve interest rate cut in June quickly dropped below 20%. The dollar rose, bond yields spiked, stocks ended the day down. Upon reflection, it could be a huge overreaction. After all, the consumer price index isn't even the Fed's preferred inflation gauge. The core personal consumption expenditures index, which the Fed tries to keep at 2%, uses a different formula and different weightings for the components, including for things such as shelter and car insurance that drove up the CPI last month. Thursday's producer price index may provide better clues. When the last PCE report came out just a few weeks ago, Fed Chairman Jerome Powell said it was in line with expectations and that he still anticipated 3 rate cuts this year. Minutes of the Fed's March meeting, also published Wednesday, said officials were pleased with progress on inflation but still wanted more evidence before moving to cut rates. The Fed expects the path to the 2% target to be bumpy. And given that Powell is always eager to point out that the Fed doesn't respond to just one data point, speculation that there won't be any rate cuts this year or possibly even more hikes seems a little excessive. On the other hand, the market reaction makes perfect sense. It wasn't just 1 month's data, it's 3 CPI reports in a row pointing to inflation staying sticky. And there were always nagging doubts about getting 3 interest rate cuts this year. A substantial minority of policymakers saw fewer than that in March. Now, the good news is that the next PCE report is due April 26. A helpful reading might just put a June cut back on the table. With that being said, let's take a look at what we can speculate for today's fluctuation. So yesterday we saw that strong fluctuation to the downside, not before obviously fluctuating to the upside right above our resistance that we had yesterday. And then obviously it broke our support of 18,200. So therefore, since we have already created this triple bottom, with the bottom being created on April 4th, April 5th, and yesterday's fluctuation to the downside after the CPI number coming out. So we're going to use that same level for today's support level. The NASDAQ obviously is trading lower. So let's bring down our resistance to right to this point where the moving average and the median of the Bollinger Bands have met. So right there and smack. It's not really that much higher, but that's where we're going to be placing it. So today, the S&P, we're going to be bringing our support much lower, so 5150, and bringing down our resistance to 5225 for the S&P. Yep, selling will be our best bet. For as far as the Dow goes, let's bring down our support to 38,400-ish and our resistance right to 39,200-ish. As far as for the crude oil goes, all right, so crude oil has stayed in balance within really all week long. It has created that double top right around $87. It fluctuated yesterday a bit lower, below $85 to 84.5, and today we are smack in the middle of yesterday's trading session. So let's have our support at 84 and keep our resistance at 87. The RSI is right on the borderline of being overbought. So I'm still bullish on crude oil. And in regards to crude oil, will a Iranian attack on Israel jump crude oil to 100? That is still on the table. A lot of analysts are talking about that there's about a 10% of geopolitical risk not factoring into crude oil's price. So that 10% could bring us right around $89.90. I doubt, obviously, we're going to be reaching 90 by Friday, but we'll be staying around 87, 88, or I will say around 87. We'll stay around that for the week. Nat Gas yesterday did fluctuate towards our resistance of 190. Didn't hit 190. It was like 188, but nevertheless, it was close enough to it. Today, we're going to be fluctuating to the downside. Perhaps a correction can be anticipated. So 175 is going to be a support. That's our target for today. Selling Nat Gas. Gold, it stayed right below our 2400, actually 2,365 to be more exact. Let's bring our support right to 2,300, and it is right in the middle of that range. The RSI stays overbought, so I don't think much volatility will be expected unless something out of the left field comes out. Then we have copper. So let's use yesterday's and Tuesday's fluctuation, which I created a double top as our resistance, which is 430, and let's bring our support to 415. So as far as copper goes, I'm looking at it for us to be looking at a balancing on consolidation stage. Then we have Bitcoin. So Bitcoin 72,000, our resistance, and let's bring up our support right to 68,000. Let's time that range. I'm looking at being just really sideways trading for Bitcoin. The currencies yesterday took a beating. The euro broke the 108 towards the 107 marker, so let's use that as our support and bring down our resistance right down to 108, which is where the moving average is sitting at. Now, the British pound also took a nice plunge. 125 is going to be our support, and let's bring our resistance to 126. And we see that the dollar index yesterday jumped very strongly. Now, why would the dollar index jump so much after the reading from yesterday? Well, because the dollar index, the interest rates are going to most likely to stay high, and therefore the dollar index will be an attractive investment for investors. Interest rates. So the more dollars are flowing into let's say CFDs or CDs, then obviously the interest rate is going to be paying off. Then we saw the other hand, the contrary, on the indices, where the indices dropped, they fell because of the market say, okay, so interests are going to stay longer, then they just take some money off the table. We have been making new highs and making great movements to the upside. So it was time for a nice pullback, a nice correction, and there we had it. So that's it for me today. Have a great trading day, and I will see you guys tomorrow.